What's up, YouTube? Welcome back to the channel. Bird Construction stock has dropped just over 17% this past month after their second quarter earnings report and has been taking a real beating in the market since then. In today's video, we will be going over whether or not Bird is in serious trouble or if this is just short term pains. This is a stock that I have a decent sized position in, so it will be a good refresher for me as well, seeing what's going on with this company as of late. Starting off with the second quarter earnings, the market was not too kind to their missed revenue and net income estimates. They reported construction revenue of 850.8 million compared to 873.5 million earned in the prior year quarter, which represented a 2.6% decrease year over year. Their net income and earnings per share also missed. They reported $20.3 million and 37 cents per share compared to $21.4 million and 40 cents per share in Q2 of 2024. These two reasons alone make up a vast majority of why the stock has dropped so much this past month, but there is another thing I'd like to get into about why I think it dropped so bad. So at the top of the financial statement here, it says Bird continues to execute on its 2025 to 2027 strategic plan, focusing on sectors that have long-term demand and drivers, and maintaining a risk balance and highly collaborative work program that will drive growth and continued margin accretion. Even though the company's second quarter was impacted by temporary project delays, as our clients adapted to rapidly changing market conditions, these clients awarded us additional scopes and work packages, giving us confidence that the work programs will proceed in the future once there is greater clarity on costs and economic conditions. While Bird's third quarter is expected to be impacted by similar delays, the company is well positioned to capitalize on a record $4.6 billion in backlog once near-term market uncertainties resolve. Based on the strength of our record, combined backlog with accretive embedded margins, and the sheer scale of opportunities in front of us, our 2027 strategic plan targets remain solidly intact. So the economic conditions that the country is going through right now is making a lot of companies become a lot more defensive with their spending. Until things start settling down with the tariffs, inflation, and unemployment rates, this may continue to harm Bird's revenues and income going into the future. Now, the CEO has stated that the third quarter is expected to face similar impacts, but I think it's important to prepare for the fact that this may continue farther than just Q3 and maybe into Q4 and even later into 2026 if things don't start settling down quick. Now, I'm going to play a couple clips of Mark Carney and Donald Trump. They recently announced that the retaliatory tariffs are going to be taken back.
We will now match the United States by removing all of Canada's tariffs on U.S. goods specifically covered under CUSMA. Canada and the United States have reestablished free trade for the vast majority of our goods. Canada will retain our tariffs on steel, aluminum, and autos as we work intensively with the United States to resolve the issues there. Following my conversation with the President of the United States yesterday, Canada and the United States will intensify our discussions to address current trade challenges in those strategic sectors and to seize major immediate opportunities for us both in trade, investment, and security.
He's removing his tariffs, yeah. He's removing his retaliatory tariffs, which I thought was nice. And we're going to have another call soon. Okay. Yeah, we had a very good call.
You're getting closer towards an agreement on trade?
I like them. You know, look, I'm fighting for the United States. Canada and Mexico take a lot of our business over the years, over 25, 30 years, especially during the Biden years. They took a lot of our business, and it's basically all coming back into the United States now. We're hot as a pistol, and it's coming back in. Because of tariffs and the incentives we give, it's coming back. And it's impossible, I think, for another country to stop it. And we are working on something. We want to be very good to Canada. I like Carney a lot. I think he's a good person. And we had a very good talk yesterday. So I think it'll be good.
With all the things going on in the markets, this is really good news for the Canadian economy, and I think it will help ease the strain from consumers as well as large clients that Bird works with. The quicker these deals can be done, the sooner things will start to look up for Bird. Although trade talks are intensifying, I do see hesitation from both Carney and Trump. So I'm hoping that a deal can be worked out quickly. Because, like I said before, the sooner a deal is worked out, the sooner Bird benefits from all of this. Now, this may not change Bird's outlook overnight, but I do think going into the future, if these deals can be done in a timely manner, that this will significantly help their revenues and income. And now that the negative commentary is out of the way, I do see some positive things out of all of this. Bird now has a record amount of backlog with $4.6 billion waiting to be realized in the near future. Once market signals that trade tensions are easing and costs won't be as high, clients will start greenlighting the start of projects and the continuation of projects. As well as this, the same clients that have delayed projects have awarded additional scopes and work packages, giving the company confidence that the work will proceed after everything settles. As well as this, the adjusted EBITDA and EBITDA margin has grown almost 18% year over year. Margin expansion is continuing to increase, driven by diversified projects in high demand sectors, infrastructure growth, and self performed work. This ties into gross profits, which have increased 20% year over year. With this continued margin expansion and gross profit growth, once Bird starts realizing the record amount of backlog, revenues and net income will be meeting and likely exceeding future guidances. Lastly, for the 2025 outlook and future outlook, says they anticipate positive revenue growth for the second half of 2025, but with the pace of growth expected to be restrained until some of the economic uncertainty is resolved. Delays due to economic uncertainty, along with slower to develop industrial maintenance work program, may drive a more measured rate of margin progression in the second half of 2025 compared to 2024, when their industrial business was fully utilized. And then down below it says record combined backlog with high proportion of collaborative contract structures and favorable margins compared to a year ago. Nation building initiatives and the development of export markets, coupled with increased defense spending, demand for healthcare and long-term care, the need for additional power generation capabilities through LNG, nuclear, wind, and hydro refurbishments, all support the company's growth thesis and margin expansion strategy into 2027, which lays a solid foundation for growth, healthy balance sheets, strong operating cash flow, and significant liquidity. Overall, it's been a really tough time for Bird so far this year. They're still facing short-term headwinds that is affecting the business, but with economic conditions starting to look better, or at least moving in the right direction, I do think Bird will start to recover. Don't know if it'll be soon. I hope it's soon, but I know they will start to recover eventually. Long term, I still have high conviction in the stock, and although it makes up a decent size in my TFSA, I do think I will be adding more shares after this huge sell-off. So that'll be it for today. Just wanted to make a quick video on the state of Bird right now and what it looks like going into the future. Thanks everyone for watching. If you found this video at all helpful, hit that like button and subscribe for future videos.